Boom. Who do you think you're fucking dealing with? Joey Bananas? Huh? Who do you think you're dealing with? Joey Bananas? No, you're dealing with the biggest fucking dog in the industry. The most competent, capable, intelligent, ultimate professional in the entire industry. Gentlemen, we're getting active. We're getting live early today because we got other things to handle. We got some other meetings coming up today, so had to jump on early to still provide the alpha, provide the juice, provide the update for the markets while still handling the rest of my obligations because we never miss. We don't take days off. We don't make excuses. Oh, I had meetings today. I have other things to do. I can't go live. No. There's always a way. If you truly care enough and you truly finally find it important enough, you'll find a way to make things happen. So we go live a little bit early, all right? So for those of you that were paying attention, saw the stream go live, you're going to get the juice live. Others, they're probably still hugging their pillows, waiting for noon before they roll out of bed just so they can catch the ultimate market professionals. Nope. Should have been up, should have been hustling already, should have been looking at the charts, should have seen what happened at the New York Open. It's all right. We'll just keep it for the competent individuals who are caught the stream live. All right, gentlemen, let's just jump right into this because we got a lot of things to discuss. I see a reversal happening in the market. Okay, so we need to be positioned for that. We need to understand what the context of that is. And some new economic data, some macro data came out that we got to discuss as well, right? CPI print came in super cool. That's inflation. Fantastic. Oh, tariffs. It's going to raise the prices. It's going to raise inflation. Oh. Inflation came down. Cool. Came out low. Wait, the price of gas is the lowest it's been since 2021. Oh my goodness. The prices of things are coming down? I thought tariffs were going to increase inflation. It was going to make everybody da-da-da-da. Listen, patience. Patience. Understand the bigger picture. Inflation's coming down. CPI came in cool this week. What does that mean for interest rate cuts? It means the Fed, eggs, the price of eggs, Paxter, came down. Nobody could afford eggs. Right? How about you make some fucking money so you don't have to worry about the price of eggs? Do you guys think I have any idea what the price of eggs is? Do you think I look at the price of eggs before I buy eggs? Do you think I look at the price of milk before I buy milk? No, it's free. It's free for me. Okay? That's not out of arrogance. Me saying that is saying you should make more money. You should figure out how to make more money. I have no idea what groceries cost, bruv. I just go to the store, I buy what the fuck I want, the healthiest things that I want, and then I leave. You think I'm looking at the price of eggs? Bruv, if you're worried about the price of eggs, you need to get inside of the Taylor's Code and start making some money so you don't have to worry about the price of eggs. That's the one thing that does make me sick about people who complain about inflation and this, that, and the third. You know what a solution is? It's not going to be the solution for everybody because not everybody can do it. But you know what the solution is? How about you make enough money so it doesn't matter? Right? Inflation is inherently good for assets. So if you own things, if you own homes, if you own assets, if you own crypto, if you own stocks, inflation is actually good for you. This is why the rich, the elite class likes to pump markets, likes to inflate the currency, which inherently is bad for the common man, but is good for people who own things. Well, if you're here to invest into crypto and to be able to buy properties, buy rentals, become financially free, well, a degree of inflation is good for you. Okay? But for those of you worried about the price of eggs, the price of eggs came down. Congratulations. Now you can start having fucking scrambled eggs again in the morning. Good for you. All right. So anyway, CPI print came in cool. So what that's done is that's going to give the Fed the opportunity, Jerome Powell, to go ahead and start cutting interest rates. Right? Inflation continues to come down. Economy continues to work well. They can start to lower interest rates again. Inherently what? Bullish for risk assets. As interest rates and the price of borrowing money continues to come down, small cap companies listed in IWM, which IWM we need to go pump for ETH to start pumping, right? Until IWM comes and goes into price discovery, we don't get our alt season. So small cap companies can now start to borrow capital at a lower rate. Great. So we continue to bring down the interest rates. Economy becomes stimulated. Risk assets start to fly again. That's what we're going to be looking at for the rest of this year. Things are looking nicely. Okay, all the macro data is coming in a way where it's telling me reversal soon, moving back up soon, new all-time highs soon on the S&P. Yep, I'm saying it, right? We called the move down on ETH. We called the move down on Bitcoin. We were talking about it for the last couple of weeks. Finally came. Now I see the market starting to reverse. A leaf, 2 eggs for breakfast every day. I don't give a fuck about price. That's what I'm talking about. Forget the prices of fucking eggs, bruv. Yeah. Forget the price of eggs, bruv. All right, let me share my screen. Let's take a look at this data, okay? So let's talk a little bit of macro. Then I'm going to show you guys my lower time frame on what's going on with ETH and a couple of our boys club bags. And then we'll do a little bit of an analysis. So let me do a little Mr. Producer. We got all them hoes. Okay, Mr. Producer it up. Screen. Boom. Let me transition. Beautiful. All right, gentlemen, let's take a look here. Pull this up. And you should be able to see this. Okay, let me know when you guys can see this. Like the stream, comment on the stream. Get this out into the algorithm. Like I said, let's prevent the makeup tutorials from people like James Charles getting out there. Let's put out some content about making money. All right, beautiful. So here's the Fed Watch tool. Let me increase the zoom on this a bit. Okay. So what are we taking a look at here? So this is the Fed Watch tool. It's a good tool for you guys to use just to keep track of what's going on with the Fed and interest rate cuts. And so here's how you read this table. It's basically giving you the percentage probability of what interest rates are going to be at certain times during the year. And so what you saw with the CPI print that had come in on Wednesday, that was very cool, showing that inflation's down, prices are coming down. The Fed, if you were tracking this, you would have noticed the percentage chance that the rates were going to get cut went up, which is good, okay? So right now, interest rates are at 4.25, 4.5% for the Fed, okay? The lower we can get this, the better, because capital is going to become cheaper. Small cap companies and individuals are going to be able to loan themselves out money. So guess what? Boom. They can go ahead and inject that money into their business, into the economy, etc. Right? So right now we're at 99% for the Fed meeting that we have on the 19th. Okay. But you see for May, we're down to a 25% chance that we're at 4 basis points. Then you see in June, 58% chance that we're going to be at 4 to 4.25 basis points, which means that there's going to be a cut that likely occurs between these two meetings. Okay. Then you see 45%. Then you see 41% chance by the September 17th, we're down to 3.754, right? So you see in the blue, this is where it's likely going to be at. So as inflation continues to cool off and it continues to come in good, unemployment's good, all the macroeconomic data continues to come in good as they have been, right? These percentages are going to continue to go up. That's what we want. We want the percentages to go up further down this interest rate table, okay? So again, here's the meeting dates. So I would screenshot this if you guys don't already have this, or go to the website, cmegroup.com/market/interest rates, CME Fed Watch tool. So you can track what days Jerome Powell is speaking, so you guys can make sure you're positioned correctly for those dates, or de-risk into those dates if you're not bullish on the potential announcement. So keep track of these dates, and then I would use this to keep track of how these interest rate percentages, or the likelihood that these cuts are happening, how are they increasing or decreasing. We want these percentages to increase further down this curve, okay? So that's good. Again, more macro data that's telling me, all right, a reversal's incoming. We've pretty much bottomed out. We've seen as much downside as we're pretty much going to see, if not a little bit more, but not much more outside of that. We're going to start rotating back up to the upside. It's not going to pay you to be super bearish moving forward, okay? Being a bear works in short spurts. Last couple of months, yeah, it would have been good to be bearish. At this point, we're either at bottoms, or if we break down from these levels, cycle's over. It's one or the other. Okay, we're either at bottoms or cycle's over. In my opinion, cycle's not over because of all this data. So that would be a tool that you guys should be using. So that's the CME Fed Watch Group. And then let's take a look at some other data here, actually. Let's pull up the charts. So macro data came in fantastic on Wednesday. CPI was a cool print. So we see how markets react. Let's actually take a look at S&P real quick. Oh, wow. Would you look at that? Would you look at that? Who could have foreseen? I had this drawn out from weeks ago, from last week. All right, I came on the stream and I literally drew these demand zones out for you guys. Wow, who could have foreseen? Look. Front ran it barely, but this was probably popped back down into here before a reversal. So again, I had drawn this weeks ago. We had S&P was trying to break out of this $6,000 level, right? We had this major demand zone right here. We bounced up off of it a couple of times. Finally, we broke down through it. As soon as we broke down through this demand zone, what happens, right? Because this is a major demand level. You see why? Because look, it comes up, it rejects, because before it was supply. It eats through supply, comes back down, boom, finally blasts up through the supply, and now it creates support. Now the demand level becomes support. We try to break, reject, come back down to demand, come back down to demand, break, reject, come back down to demand. And this was the either we break out again or we break down. Well, we broke down. As soon as you lose this demand zone, you see how fast we puked. So you lose it and then you just boom, 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 boom. So we called it perfectly. So look at that, right? It's just patience. We know what's going on. You just have to be patient, even if it's not what you want to see in the short term. This is a healthy correction. So now you're starting to see people complain, oh, S&P's down, 10% from the highs. Oh, my retirement's gonna, yeah, look, literally 10%, right? Right now, 9.6. It's down 10% from the highs. What's going on? Are we going into a recession? Tariffs, It's fine. This is not a breakdown, a break of market structure to the point where you should be worried about a recession. Because if you go back down here, we were talking about this drop. So we had this multi-year bear market over here. So let's do a channel. Right, where essentially you're doing something like, say something like that. Okay, so you had this multi-year from December 21, bear market to where you set the low in 22. Then you finally start breaking up. You broke out of the channel, retested it. Okay, finally break out. Cool. So you got this big bear market. Then you break out and you come back into a bull market. Okay. So this was the first major correction on the S&P in the bull market. Well, how much did we draw down? 10, 11%. Okay, look at that. Well, we came down 11%, and what did we do? Up only for the next couple years, right? How large was this correction? Not nearly as much, 6%, right? See this one. There you go, 10%. Look, normal. So look, 10% correction, up only. 10% correction, up only, okay? 10% correction, same thing. What am I betting on? Well, you create, this is support right here. Up only. That's what's going to happen, okay? I'm going to go out on a limb and say that's what's going to happen. So 10% pullback, 10% correction is normal. It's already happened once, twice, 3 times. I'm not betting that this third time that we get a 10% correction that it's over and it's about to roll over as CPI comes in cool, as inflation's coming down, as interest rates are coming down, as the DXY is coming down, as yields, bond yields are coming down. I'm not looking at this and saying, oh, it's over, cycle's done. Nope. It's just a normal temp. We just had this one right over here. This was in, it was literally last year, July 24. We get a 10% correction in equities to, yeah, August 5th when we had the August 5th nuke. Okay, there's your 10% correction. Then we come back. All right, we get this demand zone again. And then we just got another 10% correction. We just came back down, retested this demand. We called it perfectly. All right, gentlemen, makes sense? So we're looking good. All right. Now, is there still potential for a little bit more downside before we bottom out? Yes. Very locally. Like we could, at the lowest, maybe come down in here. But I don't see that happening. That's not what I'm betting on. And the macro data doesn't suggest that either. Okay. So then if we go back to the Dixie, we called this one too. DXY. I know this is VIX. Where's it? DXY. Right here. Look. We called this one too. We had this in green as demand. We break through the demand and look what happens. As soon as you lose this demand level, it just pukes straight down. Now we're getting this tiny relief bounce. But if we lose this level, because this would be the next demand zone, you could even draw it like, that, I guess. This would be the next demand zone. If you lose this, there's no structure here. You're coming all the way back down to here. And I'll keep this drawn so that whenever we come back in a stream down the road, you guys can be like, oh my God, he called it perfectly again. So that's our next demand right here. Okay. So super bullish. All right. We already talked about why that's bullish. One other thing I want to talk about that we didn't really talk too much about in the past, and then we'll get to Bitcoin, is the VIX. So the VIX is going to be our volatility index. Okay. When the VIX is pumping, that's going to be prices going down, people de-risking, markets are drawing down. So when this VIX gets crushed and heads down towards zero, okay, in this area, so we'll say like down in here, this is when markets are pumping the hardest, right? So VIX is the volatility S&P, volatility on the S&P index. So you see here in December, which is pretty much where we topped out in crypto and altcoins, you'll notice we were beginning of December, we were topped out in altcoins, everything was at its all-time highs. Then we get this huge VIX spike, and that's whenever we had the start of the downturn on altcoins. We crush again, we kind of get some relief, and then we just been like this until boom, we get this VIX spike all the way through February and March, and that's whenever we begin to get decimated on altcoins and on the S&P, right? Because people are de-risking, people are getting out of the market. Now, finally, we're starting to see some relief on the VIX. So again, another point of confluence that I'm looking at and saying, okay, this looks like it wants to start breaking down. Maybe do something like this. If we get this to get crushed all the way back down to these levels, again, bullish. Because the lower the VIX comes down, the more confident investors are to put their money into the market because the volatility is down, right? So we want the VIX to get crushed. Equities move up. Bitcoin moves up. Altcoins go up, okay? So I'm like what I'm seeing starting to play out on the VIX is it was up only pretty much from middle of February. Up only, up only, up only. That's where you kept seeing equities draw down, draw down, draw down. We want to see this continue to get nuked. This continues to get nuked. S&P bottoms out. All these major assets in the equity markets bottom out. Then we start moving back up again. Beautiful. All right, so we want to see that. Okay, makes sense, gentlemen? Any questions, comments, concerns? Good? Okay. So let's jump into Bitcoin real quick. What are we seeing on Bitcoin? So we've talked about this before. There's a line, a trend line on Bitcoin that you can draw that basically connects these tops from 2021 cycle and then the top here in March before we did this 8-month range. We finally broke out of the trend line. We came up and then we come all the way back down. And we retest this trend line. So this is clearly a major level right here, this trend line. As long as we don't lose this trend line, we're looking good. So down below, we had this drawn out, this demand zone from the previous all-time highs to where we started pumping. And our BTC nuke tagged this demand zone perfectly again. We called that. So now that Bitcoin's broken down out of this major range that we had drawn out, and I'll show you. So this is the, yeah, that's the original channel. I'll hide that one. So we had this drawn out. Yeah. So we had this original range drawn out on Bitcoin up here. We had tried to reclaim the range and we were rejecting. So now we're no longer playing in this range up here. Okay. So we'll save that for whenever we re-enter it. So let me hide that. Okay. So let's hide those. So let's play with the new range that we're within. I just drew this. Okay. Okay. So on a lower time frame, what are we seeing on Bitcoin? Let's get like 4 hour. So we re-entered this new range and we were, playing on top here, and then we finally broke into this new range and we created this right here. Okay, so between 95, 86, and 78,000. Okay, 78.3 right here. We came in, we tagged this demand zone, and so I'm seeing one of two things happening here. In my opinion, I'm seeing this is going to be likely our bottoming range, so I don't see us coming down much lower than this. This is looking to become pretty stable in here. If we maybe, come back down and start trading closer to like 76, 77,000, we could push this range out or pull it down a little bit, but I don't really see that happening. This looks like it's going to be the range that plays. So if this is the bottoming range, then that means really down in here is about the most downside that you're going to see on Bitcoin here. So you should see it start to level out. It's trying to do not enough data. It's trying to build another little uptrend here. We'll see if it actually plays, but technically this is an uptrend. Right? Barely on a lower time frame. It's trying to reverse. We'll see what happens. We probably get a couple more tags at the bottom of this range before we start moving back up higher. Once we reclaim this 86 level, 86,000, that's when I'm flipping very bullish, okay? Bitcoin flips 86.2. $86.3. We flip that mid-range, I'm bulled up. So do something like this. Now I'm bullish because clearly we've reversed the trend. We reclaim this mid-range and we accept up back into here. Then that's when we move higher. Okay, so that's what I'm looking for on Bitcoin on a lower time frame. Okay, so we're good there. Now let's look at ETH. All right. So yeah, I'm looking for the reclaim of 86.3. All right. Oh, let's also look at this. Let's look at. We talked about that. Put this on. Yeah, you also see Bitcoin came under the SMA 200, this red band right here. That's, if you become below the red band, that's how you know this is also pretty oversold. Okay, so that's an indicator for me where I'm saying, okay, this is pretty oversold, right? Because typically this is going to hang below the trend, right? This red 200 SMA. So when you see Bitcoin get above the lightest yellow line, which is the SMA 20, that's when it's getting overextended, okay? And you see how it tops out above the SMA 20. But when it comes all the way back down under the 200 band, that's oversold territory. So that, again, is something else that's telling me, okay, we're certainly oversold. We're not going to hang out below here for much longer. Things are going to start to bounce, okay? Now, how high do they bounce? How high do we go? We'll see. But I see things are going to start to bounce. Okay, so let's get positioned for that. Let's make sure we're ready for that. So it is under this red band now, which is giving me confidence that, okay, we should start getting a bounce here, right? Because typically that will call bottoms when you're down in here, right? Above the yellow is typically your topping, right? Above the yellow, topping, above the yellow, topping, above the yellow, topping. You see how that works? So that just gives you an idea of where you're at on a larger scale, okay? ETH. I was talking to the gentleman inside of the Discord about this one. So we called this move down to 1750-ish, right? We were talking about this for weeks on the stream, all right? And look what we did. It was a perfect, we had this drawn beforehand, right? It was a perfect tag of demand. Look at that. I had that drawn before this tagged, right? So a perfect tag of demand on ETH, right? So one of two things here that I'm looking at. Either this is the Pico low and we got the low, or we get a slight move from 1879. We get a slight move down back into this demand, about 1700, 1750 again, and start to bottom out before moving higher. So I'm looking for something like this on ETH. It actually started playing out on the lower time frame. I was saying I'm looking for something like this. So we get this tag of the demand. Look how perfect that was. I'm looking for something like this. A bouncy ball, losing steam, right? So it kind of bounces in, boom, 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 before moving like that. Okay. So in here, 1700, 1750, that's generational bid territory for Ethereum. Okay. Whether you like ETH or not, whether you think it's a cucked asset or not, etc., that's generational bid territory, because that's about as oversold as you're going to get this asset. Because the bear market lows on ETH was, well, bear market low, COVID or FTX, Nuke. FTX was $900. Over here was about 1,000, 1,300, 15, 16. So, I mean, anything inside of this green demand zone, that's a generational bid on ETH. That's generational bid. You're going to get the entire move to the upside. You're buying at the lows. I just don't see how ETH comes down lower than 1,500 without it literally just being completely decimated. It's over, right? That just doesn't even make sense. So this is generational bid territory on ETH. And if you look at some of the momentum oscillators, we go on the daily. Okay. So we were waiting for a bigger sell-off on ETH. And that's why we were expecting that move down to 1,700. The only issue that I still have is we still didn't get that oversell, complete capitulation into the red here, right? Just the same way we had on August 5th. You had a true capitulation on the daily time frame. We never got that real red, deep oversold territory on ETH. So that's why I am cautious just right at this moment before really deploying all my capital back in, because it wouldn't shock me if we got one more little puke on ETH where we come back down into like 1,600, 1600, 1650 to get that final capitulation low, right? Does it have to happen? No, not necessarily, right? I mean, you got, no, this just was a capitulation right here, yeah. Right in here. Yeah, this one right here. So, I mean, you do want it before that inevitable big move back up higher. We just didn't get it yet on ETH, okay? So just be cautious. I wouldn't deploy literally every single last dollar you have back to the markets if you haven't already, because you could see one last little puke on ETH. But otherwise, I mean, at this point, risk to reward RR's there. Now's the time you want to start looking to bid, okay? So that's the RSI. And then, oh, one other thing too we were talking about. This is how we called this move on ETH. Was we were talking about the time frame in which this would bottom and top. This bottomed and topped before inevitably getting this move to the downside. This move, this last little wick down was on Tuesday, March 11th. That is literally in the exact time frame in which we were calling for that to happen. I said about March 9th to like March 10th, 11th, beginning of the week, next week, when we were talking about it last week, I said that's when we're typically going to get, that's when it looks like we're going to get the low on ETH. Look what happened. Literally called it beautifully. So if that is the low on the ETH, we timed that perfectly using the GLI and using the time frame in which we bottomed on the August 5th nuke, and using that piece, using this range for confluence, right? So we timed the bottom perfectly, and so that's whenever we're going to start making moves on our assets. One other thing I wanted to look at was where are we at on others. Okay. Let's look at, this is crypto total. This is going to be excluding Bitcoin. Yeah, let's look at total excluding Bitcoin. Okay. So this is going to be an important chart to pay attention to. So we saw in December, beginning of December, whenever we topped out on altcoins, we rejected effectively off of the previous all-time high. So you can move it like right there. You can even use this one. Okay, we're having an issue breaking out of this line right here. Okay, here's why this is interesting. So let's look at IWM. Look at these charts. Do these charts look similar to you? They should. Okay. Look at this. This is a new piece of alpha I'm going to show you guys today. Okay. So look at others. So this is crypto total market cap, excluding just Bitcoin. All right. So this is basically altcoins, risk assets within crypto. IWM is an index of all the shit companies, small caps. This is basically the risk index. This is the riskiest index that you can invest money into in the equity markets. Okay. So this is all their altcoins, their shit coins. When IWM breaks out into price discovery, that's when we have alt season, because it's complete risk on. Everybody's aping into the markets. If equities are aping into IWM, that means they're fully risk on, bidding. That means full risk on to what? Crypto. They're also going to be bidding Bitcoin, Ethereum, all the big crypto assets, which inevitably pumps our bags. So what happened this time? This was actually the first time in which IWM went to go break and make a new all-time high and did not succeed. We actually rejected off of the previous all-time high effectively perfectly. Let's go like this. Literally perfectly. Look at that. Perfect rejection off the all-time high. What do we do on crypto? Look at this. It's basically the same fucking chart, which is really interesting to see. So let's go like this. Look at this. It's literally the same chart. Look, IWM starts pumping. These are the small cap stocks. This is as risky, as far down the risk curve that you can go on IWM or on the in equities. You get this pump. What do you see on altcoins? Everything outside of Bitcoin. Huge pump. Okay? You kind of range out up here at all-time highs. You do the same thing here. You draw down and then range. You draw down, range. It's the same thing. IWM starts pumping. Altcoins start pumping. This is what happened different this time. Then we come to do an all-time high break and we get stuffed right here. Guess what alts do? Get stuffed. Okay? It's literally the same chart. So there's a huge amount of signal in IWM. Let's get rid of those drawings, right? So now we got to say, all right, well, what's going to make IWM pump? Because if IWM pumps, then Ethereum pumps, and so do altcoins, right? So the good news is this is in a demand zone. Okay. All right, this is clearly supply overhead for here, clearly demand over here. We came back into this demand, so this should hold for IWM, meaning that muted downside, which is good. Again, another point of confluence that we're probably bottoming. Okay. Same thing for others. Okay. We're at a major demand. This is where I'm looking for bids. Because what makes shitcoins, what makes IWM pump? Why would small cap companies pump? Why would people bid these? Well, these small cap companies, they need money to invest into their business. They need money to be able to go ahead and generate revenue, generate products, generate anything, right? So as interest rates are coming down from the Fed, inflation's coming down, meaning that there's going to be better monetary policy for these kinds of small companies. They're going to be able to they're going to be able to borrow money at cheaper rates. They're going to be able to grow their businesses. They're going to be bullish, right? Lower interest rates is bullish for small cap assets. So if that's bullish for IWM, the interest rates coming down, inflation coming down, the economy is doing better, IWM is going to start to pump because these small cap companies are going to start to do well, which makes sense because you're at a major demand zone. Everything is lining up perfectly. This is not an accident how these things are all lining up. So it's not going to range for that long, but what you want to see here is now like a move like this and finally a breakout on IWM. That is when you have your actual alt season, because the last time we did an all-time high break was back in, this was November of 20, okay? So IWM starts breaking to new all-time highs. That was the 2021 bull market in crypto, right? You see altcoins break its all-time high. So IWM leads the way, breaks the all-time high right here. Guess what happens? Altcoins follow suit. Okay. This pushes all-time highs. Altcoins start pushing all-time highs. All-time high, altcoins all-time high. Perfect synergy, right? So if we're going into an environment where the IWM should start pumping again, they're both at their major demand zones. Look how they're all both at these levels right here, right? If we're bullish on small caps and equities, we're bullish on altcoins. When this breaks all-time high, this is our alt season. This is when you're going to see the absolute ridiculous outperformance on the Boys Club, on ETH Beta, on Solana, on XRP, on Pepe, all those things that people are bullish on, the altcoins that people are looking for multiples on outside of Bitcoin. IWM into price discovery gets altcoins into price discovery, right? That's the alt season indicator. IWM is the highest risk on index in equities. When this is at all-time highs, everybody's bulled up to the tits, everybody's aping into markets, altcoins go crazy. Understood? So this is a good chart to watch as well, because anything that's bullish, small cap companies, is inherently bullish IWM, therefore bullish altcoins. Okay? Bullish altcoins. We want to be bullish altcoins. Okay? Let's get this out of here. We'll leave demand. We'll get rid of that. Okay? So I'm liking what I'm seeing. This is certainly going to be the region in which we see a shift in momentum to the upside. The question is do you actually know what assets to bid? That's what I always say is it's the importance of becoming a part of a network like the Taylor's Code is, yeah, sure. Majors could start to rally. They could start to move back up. We could even go back to new all-time highs. The question is do you know what to actually bid? Do you know what assets are favorable? This is not an environment in which you can just buy any coin in the market and it's going to pump to Valhalla. That's not the environment that we're in right now. The environment that we're in right now is there's so many assets out there that can be bought, that can be traded, that are coming out on a daily basis that people, it's paralysis by analysis. They don't actually know what to bid because there's too many things out there, right? And the problem is if you don't know what you're buying, what you're selling, how it trades, you're going strictly based off of hype. You don't want to buy assets for a long-term hold that are strictly hype based, because as soon as that hype's gone, guess what? They go to fucking zero. It's perpetual bleed down to zero. The assets that you want to be accumulating, the assets that you want to hold on a long enough time frame in these markets that are going to make you the most money are the ones that have correlations to majors, because majors are not going anywhere. What kind of assets are those? Pepe, Andy, Wolf, Brett. These are the assets you want to be holding on the next move up and accumulating at the lows at the right times, because this is not a perpetual bleed. This is not a perpetual downtrend, assets cooked, decimated. No, it's right at the major demand level, right? These assets are going to be the ones that are going to be winners on the next leg up, because all the liquidity, all the money that got drained and siphoned out of the markets over these last couple of months left the shit projects, left the projects that weren't going to be around for the rest of the cycle, left the projects that are going to be dead after this cycle, and they're going to start rotating back into the winners. So what we had over these last couple of months was a huge flush of the market out of the losers, out of all the extra altcoins, out of the other bullshit projects that nobody was going to bid long term. When that money finds its way back into the market, you're going to see the winning projects pump that much harder, because all that money is going to get concentrated back into winners. Pepe, Brett, Andy, Wolf. And then, of course, the other assets that we're accumulating inside of the Discord, which I'm going to start talking about with the gentleman inside the Discord too, because we're almost at the time where it makes sense to bid them now that the downside is mostly muted. So you take a look at something like Pepe compared to, I'll show you, we can even do something like, what's a coin that shat itself? Like Cerebro. You look at Cerebro. Look. Pepe has been around. I gotta find something that's been around longer. But look at Cerebro. It's just like, this is an example of something that was a winning asset that was doing fantastic. That as soon as the hype was over, it's just perpetual bleed. There's no real base forming. It's just down, 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 down. Look, right? This is what's going to happen. A lot of people are going to end up buying these coins that they have no idea the chart looks like this. It's just dying dead, thinking that it's going to pump back up, when in reality, it's charts like Pepe, charts like Andy Wolf that actually still have structure, that aren't at fucking zero that are going to perform, because it's just not a perpetual bleed all the way down here. No, there's a base right here. It's been around long enough, has enough liquidity, has enough interest in it where this base will hold. And down in here, generational bid. Down in here, generational bid. Because eventually you're going to get that move, that pop back up to the upside, where you go to new all-time highs, right? You got to know what assets to accumulate right now. That's going to be the toughest part of this cycle, is that so many things have been destroyed and beaten up to the point where they're never going to come back. The charts are not salvageable. The hype is no longer there. The narrative is no longer there. You got to be able to concentrate your capital into the winners. It's not just a fucking close your eyes and throw on a dart at a dartboard. You hit something, you win. No, it's certainly going to be winners are going to win. Okay, the rich get richer. So you have to understand what's trading well, what's trading correlated to major assets like the Boys Club, which is trading correlated to Ethereum. Bid those, knowing that we're oversold, that we're bottoming out on the market, to then ride the momentum, ride that way back up to the upside. So something like Pepe, I'll even give you a target on something like this. What is that? Even see that. Get that out of there. I'll even show you a target on Pepe. You can draw the range. You can draw the range like that. I'm looking at Pepe. Once IWM breaks out, we get the alt season, we get that next leg up. I'm saying at least. Tag this. What is that? Maybe not that. Hold on. At the very least, you're getting this. I have to figure out what the market cap on this is. But at the very least, you're getting this 1.618 to play. Okay? Even if you get this 1.618 to play, which I believe it goes higher than that, but even if you just get that on the move back up, you break this previous all-time high, that move on Pepe alone, just from where it's at right now, it's a 5x, over a 5x. So you over 5x your money on that move. You go to something like Andy, which obviously is going to do more multiples than Pepe. Pepe does a 5x, Andy will do 10 plus x. Let's look at Andy. So you get those wicks down there. Look, Andy swept that final low. Even if you want to draw the fibs like this is one major range. That was a little deviation at the bottom. Draw it like right there. Let's draw it like this. I'm seeing this at the minimum get hit. So what does that move? 27x. Not bad. That's what I'm saying. Like, you hear 27x and you think, holy shit, that's a ton. No, that makes sense. That's what it would go to. Because that would be 1.12 or $1.1 billion market cap, which makes sense. If Pepe goes to where it's supposed to go, Andy absolutely can run to a $1 billion market cap, which of course right now sounds, oh my gosh, that's so insane. There's no way that's possible. No, of course it's possible. Andy's already been at 300 plus million. So from the previous all-time highs, if Andy could just do a couple more X's, it's already at $1 billion. right? It's just, that's why these lows, when you understand when to bid, everybody else is scared, everybody else is cheating, nobody thinks it's possible. This is where the savages come in and bid like heroes. Same thing right here. Like, we've been at these prices before, right? People who are bidding here, people who are bidding here, bidding down here, they benefit from that move. People bidding down here, they benefit from this move, right? And those aren't small moves. 7x. $8x. Boom, 27x. You get Andy to go to new all-time highs because Ethereum goes to new all-time highs. You're ripping off a 27x. Grand into 27K. 10 grand into 270,000. 100 grand into 2.7 million. I like that. All right, gentlemen. All right, gentlemen. That's the fucking juice for today. Outside of that, that's all I got. I got to get on this meeting. For those of you not already inside of the network, the fraternity, the university network for the ultimate professional, I encourage you to do so as quickly as humanly possible. I'm telling you, there's no time to waste. There's no time to wait around for making money, position yourself in the markets, this and that. Quit waiting. People who are slow lose. People who are slow don't make money. So the longer that